Objective of this chapter is to define the cost of a non-current asset. Calculate the initial cost measurement of a non-current asset. Calculate the initial cost measurement of a self-constructed non-current asset. Distinguish between asset and expense item. Identify the subsequent expenditure that may be capitalized. Explain the treatment of borrowing cost as per IAS 23. Explain the requirement of IAS 16 in relation to the re-evaluation of non-current asset. Account for re-evaluation of non-current asset. Account for gain and loss of disposal of non-current asset. Calculate depreciation based on the cost model. Calculate depreciation based on the re-evaluation model. Calculate depreciation on asset that have two or more significant part, means complex assets. Apply the provisions of IAS 20 in relation to accounting for government grants. Define investment properties. Discuss why treatment of investment properties should differ from other properties. Apply the requirement of IAS 40 of investment properties. Definition of the property, plant and equipment as per the IAS 16. Property, plant and equipment are tangible assets. It is important, tangible asset means intangible asset will not comes under the property, plant and equipment held by an entity for more than one accounting period. So this is another important thing. It is for more than one accounting period for use in the production. So you have to use it in the production like machinery or supply of goods and services like vehicles for rental to others. Examples may be JCB that you may have to provide on rent. Administrative purpose, it may be computer for the staff. So all these will come under the property, plant and equipment. An item of property, plant and equipment should be recognized as an asset. So even though if it is a property and plant and equipment, you have to recognize it if it is probable that future economic benefit associated with the asset will follow the entity, means it will be valuable in future, it will give the benefit to the organization, and also the cost of asset can be measured reliably. So reliably, if you are able to measure the cost of asset, you can recognize that asset as a property, plant and equipment. An item of property, plant and equipment should initially be measured at its cost. It includes, means cost includes all cost involved in bringing the asset into its working condition. Cost includes in this initial cost capital cost such as cost of site preparation, delivery cost, installation cost, borrowing cost, that we will calculate as per the IAS 23 that we will see in later in this chapter. Expense item such as fuel, training, warranty cost should be written off as incurred. So these will not become the part of the cost of property, plant and equipment. Dismantling cost, that is also called decommissioning cost. The present value of the expenditure should be capitalized and an equivalent liability should be established. The reduction of this responsibility would then be reversed over the course of time until the dismantling costs were paid. This means that liability grows by interest rate each year, with the increase accounted for as finance charge in the profit and loss statement. Here you have to understand that the present value of the dismantling cost we have to add in the cost of property, plant and equipment. However, this present value will increase every year, and that increase will increase every year in the profit and loss statement. It will be more clear with the example. And to calculate the discount, you need some rate will be given and you have to use this formula. Two things is important here. One is what is dismantling cost. So you can see in next slide the definition of dismantling cost, and we can use this formula easily in calculator that I will discuss in next coming slides.